I'm Michael with Back to the Future Trading, and you're not imagining thing. That is the opening theme of Dallas. And we are here today looking at crude futures, and I thought, what an appropriate opening for this analysis. Right, so hey, first of all, good afternoon. Appreciate you hanging out with us, and I'm more than happy to share our knowledge with you. And I wanted to go over a tale of two patterns today in crude futures. There's oil in them thar hills, and we will appropriately label this in the YouTube description, a tale of two patterns. Okay, so crude, like every other market, has a natural vibration. Gann said that every instrument in the known universe is reacting to a cause-effect relationship. And if you could determine the cause, you can predict the effect long before the street was aware of either. And so today I want to show you a way that we've sort of honed in that radar a little bit and maybe spark some research back on your side. So the Flux Daily Cycle Marker indicator has 4 cycles. It has phase 1, phase 2, phase 3, and phase 4. And those cycles are represented by circles on our chart. And for the case of this example in crude, I'm only showing phase 2 and phase 4. And phase 2 is represented by a large green dot rather, and phase 4 is represented by a large red dot. And one of the things you'll notice is that crude tends to reverse a lot around these dates. And so in the upper right hand corner of my screen, you'll see that there's an alert telling us when the next phase is coming. And in this case, the next phase 4 is coming in 12 days and a few hours. That would be August 21st. But crude doesn't end there. Our analysis sort of just begins in terms of what I refer to my students as a constellation. A constellation is a unique cluster, sort of a fingerprint or a repeating pattern that recurs, recurs in the market. And so I want to draw your attention really quickly over here to this pattern sort of last September, because we're coming into September again, and the markets, while not overtly seasonal, sometimes the repetitions of these patterns can be very important echoes of one another. And so there's a few things here that I want to challenge you to look at if you're a crude futures trader. Number one, I'm going to pull this box back here, and I want you to see how the pattern begins. First, it starts off, I'll put another letter here. We'll just put the letter Z because I haven't used that letter yet. At Z, there's a lower low red dot, and we know that in our Guide to the Histograms guidebook. We'll put a copy of that in the description as a pattern 4. So a pattern 4 lower low red dot. Basically the market pivots here at Z up and then returns with a deep retracement to a pattern 2. So we have a lower low red dot and a retracement to a lower pattern 2. Well, move forward over to the right and you'll see where I have a Z that there's a pattern 6, and you can investigate what that means in your guidebook. But then another deep retracement here into a pattern 2. Okay, so you see the two commonalities so far. There's a pivot that starts with a red dot here, and then a deep retracement into phase 2 green dot. There's a pivot that starts with a phase 4 right here, and then a deep retracement into a phase 2. Okay, now look at the third component of this pattern. Number one, the banks drive, and the next phase 4 they blow right through. Like it's not even there. This repetition of that pattern, there's a small retracement. Okay, but they still, they blow right through it. You like that sound effect? Cool. Now, just above the blow up of that candle. Now, here's what I mean by that. I'm going to do some funkiness here. That candle that blows through the phase 4 signal, I'm going to put a dark blue rectangle here. And I want you to see if you key in on this. Your brain's really good at seeing these patterns, right? And I'm going to copy that rectangle and show you, look at the candle that blows through the red dot on this side. The close of that candle. So the close of the puncture candle of the red dot on both sides, do you see how that ends up being the floor for this unique CDE pattern that's recurring? So after the blow through, after the breakout, after the puncture of B, the market goes into a vibration pattern. Or it's like a ping pong match. That if it was inside of a pinball machine, it would sound like this. Ding 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 ding. It would be caught between two bumpers. And so what's interesting to me is that the size of the zone, if I copy and paste it here, look, I haven't done anything but copy and paste it. Watch what happens when we walk over and put it on top of the existing zone. It's identical. Minus 56, 10 ticks. So it's almost the exact same size, about 10 ticks smaller than the original copy. Ooh. Now, look at the overall height of the move. Ready? All the way up, 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 all the way up. Ding! Right there. Let's go ahead and make that arrow red. Because red, I don't know. Now I'm going to copy and paste that arrow. And now let's drag it over to our new pattern. Ding! Now, I'm not one for conspiracy theories, although I do have an awesome tin hat collection. However, you will take note of the fact that the original height of this really weird pattern that occurred last September is also kicking in with the identical size move right here. So there's a lot of similarities right now between a pattern last year focused on these vibrational cycles that we teach and you can learn about. And now we're in the heart of the CDE, Suda, or Kadi, depending on which pronunciation you choose. And what's unique about the CDE is this. We know where we are in the pattern. If that pattern's going to repeat, look at what goes on in the original echo, the original iteration of the CDE problem here, this pattern rather. Number one, we have a sense of how long it lasts. Okay? So one of the things we can do is we can take one of these rectangles and I can measure how long it takes to get back from the range when it starts, how long it takes for the what? For the high to get reached again, for the high to be retested. And that's this box right here, which I'm going to copy. And now we're going to do what? Come on, boy. We're going to paste it over here. Come on. And so when we get to this iteration of the box, you can see which candles here have formed the zone. And now I'm going to show you that if we overlay this, if the pattern repeats, one of the things we should be looking for is the market to be back up near the high, just like it was in the original pattern. By when? Well, not today. It looks like tomorrow. Okay? I'm just saying. I'm not saying, but I'm just saying, if this pattern repeats what we're seeing here, we should see a high of 50.58, a retest of the original high of this zone in the next day or two in crude futures. Now, what happens then? Anybody's guess. But if we follow the pattern that's here, there seems to be an understanding of a downwardly sloping, let's just kind of ping that right there, a downwardly sloping market. Okay? So I'm going to take this blue line here, I'm going to copy it, come on boy, and I'm going to paste it over here. So if this pattern is going to repeat the way that it did, at the very least we're going to see crude go from the 49.40 area up to the 50.50 area. So that's 100 ticks, or about $1,000 per contract available if that move continues to move higher. Now, one of the things we know from the old pattern over here on the left is that once we get past this D point and the market starts moving to the midline, it doesn't come back to the low. So the previous low is generally safe harbor, if the patterns repeat, for a stop to get to the high. Now, maybe it continues, maybe it bursts through and it breaks the high here. All I know right now is that we are following this pattern pretty closely with some remarkable similarities that are all based on times that we knew about in advance. All right? So I'd like you to take a look at this. I'm going to save this workspace. I'm going to put that copy of the workspace in the description down below. Look at the construction lines. See for yourself if you don't see the same patterns. In fact, what I'll do is I'll put chart markers on these circles that are red, and I'll put green chart markers on the circles that were green, so you can go back and just sort of replicate what I've done here on this chart back home, and see if you don't see the same kinds of patterns when you open a daily chart in NinjaTrader across the span of those bars. Now, the only appropriate way to end is to keep playing the Dallas theme. Oh yeah, boom chicka boom chicka boom chicka boom chicka boom chicka. That's when TV was TV and men were men, baby. Woo! And if you weren't careful, your ass got shot. Have a great afternoon. Please like and comment and subscribe down below if you like what you're seeing here, if you think this pattern is going to play out, or if I'm full of poop and you don't agree with it. Let me know what you think down below. But remember, the markets that you trade, I believe, are predictable. These patterns repeat. They have been repeating for over a century, since W.D. Gann first discovered the cause-effect vibrational relationship. And we can teach you how to do it. You just got to let us know and come to the website and sign up for our demo. I'll talk to you later. Have a great afternoon.